Good morning and welcome to the VSA Morning Miner. It is the 1st of February and today I'm joined by David Scriven. David, how are you today?
Very good indeed, and I hope you are likewise. And thinking of what was a bit of an eye catcher, I think, overnight was General Motors planning to invest 650 million to develop Thacker Pass with Lithium Americas. So that's very, very interesting. Auto company, mining development. I think production off the top of my head is targeted for 2026, but I could be wrong on that. But I think this could be a sign that other automakers might do the same thing. Security of supply. What's your take on that?
Yeah, it's something that followers of lithium have been talking about for a while, as the automakers actually getting involved in the upstream side of it, which is something they haven't had to do for traditional ICE vehicles. But given the potential shortages of lithium, things have changed, and General Motors have made the biggest investment to date, and a hugely significant one. It not only is sizable at $650 million, but it also firms up that US supply chain, keeping everything in country. But there are some conditions on the investment, and it'll be split into two tranches. The first of which is contingent on environmental permitting, which has been rolling on for some time at Thacker Pass. And there was an update in January where the courts decided they didn't need any additional hearings, and based on the information they got, they would make a decision which is due in the coming months. And the second tranche will then come in after the separation of the businesses. Lithium Americas currently has Thacker Pass in North America and also JV in Argentina with Ganfeng, and those parts of the business are being separated, which was announced a few months ago, and that second tranche will come from GM into the US only business after the separation is complete. But yeah, really, really significant, and also a good read through for other US lithium deposits like American Lithium, which is another one we follow, and also buy-in on the clay style deposits, which is what Thacker Pass is, as is American Lithium.
Indeed, so it'd be a big shining light on those opportunities there, those assets. Perhaps moving on to other subjects, I noted that Glencore's production volumes were in line for 2022 with an RNS out this morning. The final quarter saw some increases across the commodities, but it was a mixed picture amongst them all. What were your thoughts there?
Yeah, obviously, last year there was quite a lot of disruption in global copper production, and Glencore wasn't immune to that, with copper output down 12% year on year. And then other commodities where they have experienced reductions was in partly due to changes in ownership and their sort of effective share of the output, not just operational performance. I think what's interesting though is that broadly the guidance for 2023 that's announced today is flat to lower. Certainly in copper it's flat. It's flat to lower. In cobalt it's broadly flat. Zinc it's flat but perhaps slightly higher. Ferrochrome is lower. Coal is flat. nickel is the only one which is demonstrably higher, but still only modestly for next year. So not significant increases in supply from Glencore.
Interesting. Perhaps moving further, another name that popped out this morning was Gem Diamonds with their Q4 guidance within or fractionally better. And I noticed that carat price was a little bit softer, but what were your thoughts on Gem?
Looks like production and costs were all within the guidance ranges, so that will have been well received by the market. Capex was the only thing which was notably different. That was some way below. In fact, that was $11 million against guidance of 19 or so. The company highlighted their cash position at the end of the year of $8 to $9 million, and that balance will be spent in 2023 to complete that capital project. But yeah, sale price slightly softer, 17.55 a carat against 18.35 a carat, but sometimes that's product mix rather than changes in pricing. And Anglo's announcement this morning on their first site, they're looking at China's reopening as a significant driver for diamond prices this year and diamond demand recovering.
Yeah, no, I noticed that. Well, I mean, also with Gem, they've been facing, like many other people, I guess, power problems from Eskom, and they're looking for alternatives. So hopefully they can find some solutions there. Are there any other names that you'd want to highlight this morning, or should we call this time out?
Just to highlight Atlantic Lithium's resource upgrade this morning. That's increased from 30.1 million tons to 35.3 at 1.25% Li2O. They've also increased the confidence, so now 79% of that enlarged resource is within the measured and indicated, so that all feeds through to the upcoming DFS and probably adds a couple of years to the projected mine life. And as we keep saying, there's still exploration upside to increase from there. So another positive milestone for them. And then just one other bit of macro news in China. There's some data out from one of the national agencies highlighting that 2022 was a new record for solar installation in China, with 86 gigawatts installed, which is up 62% for 2020 against 2021. So we've been looking at sort of 100 gigawatts a year plus for the next 3 years, which is important for silver demand. And given now 2022 was 86, that 100 looks quite manageable.
Very interesting. If there are no further thoughts, perhaps we should wrap things up here.
Yep, thanks, David. We'll be back soon.
Many thanks.